Hello, I'm Adam Grimes, and this is going to be a short video blog on how to trade the first pullback following an attempted trend change. This blog was first published on my blog at adamhgrimes.com/blog. So if you like this and you found this someplace else, you may want to check it out there. So a pullback is a standard trading pattern. It's also a pattern that has a statistical edge. It's based on the tendency of a trend to persist, which means we have to have an intact trend. And there are a number of subtle things that we look at when trading pullbacks that can increase confidence and increase the win rate. But even just simply blindly taking every pullback after a large move in the market does have a slight statistical tendency, and we can do a little bit better than that. Today I want to talk about the first pullback that comes after a change of trend, and the reason is because we have a setup beginning in the US stock indexes for this type of trade. And we'll look at that in a minute. But first of all, kind of big picture. So what we're looking for here is some evidence that the trend is changing. And this could be like just a chart pattern that shows the market rolling over, and we'll look at the S&P and see that some kind of exhaustion, a failure test at previous highs. Those things are nice. And then the key is we need to wait for the first large counter trend shock. So if the market's been going up, we want to wait for some evidence that the market is having difficulty going up, and then wait for that first large downward spike. And then the third part of the setup is we want to wait for the first consolidation. The character of that consolidation matters, and we'll talk about that. And as far as the entry trigger, well, let's get to that in a moment. So here's the S&P 500. If you take a look at the daily chart in the upper right corner, and I'll give us a little bit of room on the right of the chart. So what we see here is a market that had been going up, and if you look at the recent pivot highs, which I've just kind of outlined there, you see a pattern that could be some variation of a rounding top, depending how you wanted to delineate that or what you wanted to say about that. And then we have a strong thrust down. Now, this is why some kind of band or channel is very helpful, because this is the first time in quite some time that we have been down to the lower Keltner channel. And in terms of character of the market changing, if you look back to the last times we have tagged that channel. So here is April. And then if we go back to January, we have a situation that looks more like what we have here. Notice the difference. April, touch, and then what we would call price rejection, a pretty immediate swing up. Look what happened here in January. We touched, and then we consolidated, and what happened? We got another thrust down. So that's what we're playing for here. What we're looking for is considering the possibility now of something like that January market evolving here. So let's look at this. We've had this thrust down, and then we really want to monitor the character of this bounce. So does the market recover very quickly, makes new highs, and keeps going? That's certainly a possibility. And that would be the strongest vote of confidence from the bulls. Perhaps a less strong alternative would be the market quickly getting back up to those highs to see at least a day or so that looks like this day but flipped upside down. So you have a large standard deviation day up. And then the third possibility, which looks like what is underway, would be to consolidate roughly in this range. And if we see this, then we're going to be on guard for another breakout. And our entry trigger, people always want to know where to enter trades. In this case, the structure and the setup is a lot more important. And what we likely would do is, you could do something as simple as entering with the downward momentum, so looking for the low of a previous day to be broken once you have an intact setup. So that's what we're looking at here. And if we flip through some other major indexes, here's the Russell, slightly different situation. Here is one of the European indexes, could be something similar. In fact, if you look, we had that type of situation here, a little bit more of a complex consolidation, but eventually broke down. So these simple patterns work, and we're not really predicting anything, but we're just noticing how the buying and selling dynamic of the market unfolds. And if we're looking for a short here, should that short fail, that actually would be a strong vote of confidence for the upside. And it's important to know where these probabilities are and how the market is unfolding. So currently we are watching and on guard for a potential short setup in the US stock market. Last point here before I wrap up. Notice what happened again. I'll go back to January. We're not saying that this is a crash, and a lot of people are looking for, people always like to talk about the dramatic crash, and you see in January you had a trade, and if you were short, then you had profits that were gone in 2 or 3 days, and this could very well be that same type of situation. So don't necessarily assume that we're looking for 25% correction or anything like that in here. A trade is just a trade. Sometimes that's all it is. Thank you very much.